The US stock market is about to see a major event. You could say investors worldwide are watching closely. In the short term, its impact could even overshadow the Israel Iran conflict, and that is the Federal Reserve will announce its June rate decision. The biggest market focus now is whether the Fed will cut rates once or twice this year. Will there be a real chance of a rate cut? At this stage, the market broadly expects Fed policymakers to deliver the first rate cut in September 2025. There's still a chance for two cuts this year, but in reality, the risk of the Fed being unwilling to cut early is still there. In fact, that risk is still growing. For example, the current trade war, although market attention has shifted away from it, still lacks a permanent solution. There's no long-term resolution yet. So what does that mean? For Trump, tariffs and trade policy are a key weapon. It's one of his signature moves. It's his go-to strategy, so he's unlikely to let the trade war come to an end. He still wants to pressure the market and pressure the other side to achieve his goals. So basically, during his term in office, a permanent solution is very unlikely. As a result, without long-term resolution, uncertainty over inflation grows. On top of that, late last week, the Israel-Iran conflict broke out and has lasted 5 days. There's still no sign of it calming down. As a result, oil price volatility has intensified, and that volatility in oil has triggered concerns that upcoming oil supply disruptions could lead to another wave of inflation worries. If crude oil prices rise, that could significantly impact the US inflation. So that's another concern. As for the rate decision, there's no expectation of a cut in June. The Fed is widely expected to keep rates unchanged. That move is basically the market consensus. There likely won't be surprises. Still, the market is hoping this rate meeting will offer some sign of potential cuts this year. So that's where everyone's attention is focused. That's a key, especially considering the US economy still appears healthy overall despite a slower job growth. Although job gains have slowed, the unemployment rate has remained steady for 3 straight months. As for May's core inflation numbers, they came in below expectations for a fourth month in a row. That kind of result is relatively positive and gives markets confidence in future rate cuts. So as long as there is a clear chance of a rate cut this year, and that's reflected in the rate statement, it could give the current indecisive market a strong and positive signal. It's possible the market could then see a major rally. That scenario is very likely because global attention is extremely high. If we really get one or two cuts this year, that would even be a positive for Israel too. It doesn't have to happen in June specifically. Just the action of cutting rates is bullish. If a surprise cut does happen in June, even though the probability is low, it would be a major boost. A big upside surprise. It would beat expectations. But then if there's no surprise, if they simply give a clear signal that one or two rate cuts are likely this year, then that would already be a strong positive. That probability is high, and it could significantly boost market confidence. So at the moment, we can see that the market is at a very critical level. Whether it can break higher depends on one thing, a major positive catalyst. If relying on its own momentum alone, the trend still looks weak for now. It's still on the weak side. From a technical view, it's clear the market is hesitant. The upward momentum here has clearly lost steam. There's a lack of follow-through, so it needs a strong catalyst. If the Fed's guidance ends up disappointing the market, it could increase volatility. We could see more turbulence, so we'll have to wait for the outcome. Right now, everyone is watching. The more attention something gets, the bigger the market impact it tends to have. At this point, we won't go into further detail about the overall market. There's really not much to add. For now, the situation is fairly straightforward. At current levels, chances are high that the three major indexes will just move sideways. The probability of consolidation here is high. We're waiting for a major catalyst to drive the next move. It's not just that the S&P, the Nasdaq is in the same boat. It's also showing hesitation at this level. So right now, without a strong catalyst, it's hard to push higher. It simply can't gain momentum. And the Dow Jones is even more evident. At this level, it's been range-bound for quite a while. Clearly, on the upside, it's struggling to break out or gain traction. So this is a critical level. Without some strong market catalyst or momentum, the most optimistic outlook is probably just a continued consolidation. Because at the moment, the market is weighed down by more negative factors than positive. If you look around, it's easy to find news headlines that are bearish, but when it comes to bullish ones, they are few and far between. Let's take a moment to focus on Google. Why talk about Google? Because recently Google has had a strong positive catalyst. Just recently, Google launched a powerful new model that drastically cut inference costs. As a result, Google is making steady progress in AI. It's on solid footing. They've delivered strong results. The market has responded well with strong recognition. And from the stock price, you can clearly see the rebound. This recent rally on the daily chart has been steady and strong. Very stable price action. Compared to other tech giants, it's stronger than Tesla and Apple, though not as strong as Microsoft, Nvidia, or Meta, which have shown even stronger moves. Still, Google's own price trend has a key trait. It climbs steadily, step by step. It keeps moving up, almost like climbing stairs. You can see it goes up, then down, then up again, then down again, then up again. After pullback here, it resumed climbing, and now it's moving again. So it may continue this bullish pattern. From a technical perspective, on the daily chart, it's showing a stable, gradually rising bullish structure. The moving averages are trending upward, and the MACD indicator clearly shows. Through last week, bullish sentiment remained dominant. Momentum was on the bullish side. There were brief pullbacks, but no major bearish sentiment. Instead, each time the pulls quickly regain control, this shows how stable the uptrend is, gradual and steady. The rhythm has been very well maintained. So moving forward, the uptrend is likely to continue to extend and remain in play. On the 1-hour chart, we can already see this pullback is nearing its end. It's a technical correction after the recent rally. On a smaller scale, the correction is over. So what's next? It will likely resume the larger trend. That means the daily uptrend will continue. Why do we say it's over? Because the MACD has now formed a bullish crossover. The bullish momentum has started to build. Meanwhile, bearish momentum has weakened significantly. It has nearly faded at this level. Let's take a look at the candlestick patterns. On the 1-hour chart right here, we see something interesting forming. Why is this important? Because it shows a bottoming pattern. This recent pullback seems to have completed its downside move, so a short-term bottom has clearly formed with the bottoming structure. After a panic-driven gap down, the bearish momentum here was released in a highly emotional manner, extremely intense in the short term. So once that bearish pressure cleared, what happened? It hit an exhaustion point, and going forward, there is unlikely to be much fresh downside pressure. It already hit a limit that allowed these bulls to quickly push the price up. So we saw a rally. These candlesticks here show that clearly. The strength was solid. Why was that? How did it rise without much volume? What does that mean? It means bearish momentum was mostly exhausted here. There was no more pressure holding prices down. With that out of the way, even slight bullish effort led to a strong bounce. That bounce was both quick and clear. Just look at the candlesticks. They're strong. Especially this 1-hour candle is very solid, so we can tell this is a bottoming signal. A short-term low has formed at this lower price level. It's a clear 3-candle reversal pattern. This clearly built a price floor. With that floor in place, we should see further upside. This is an opportunity. At the current price level, this is a favorable entry point. Even though the broader market might not be in a very favorable environment, The major indexes right now are struggling to move up. All three major indexes are stalling. There's no strong positive catalyst, and bearish factors are piling up. Uncertainty is also growing. But for individual stocks, especially Google, its own trend remains very stable, so the opportunity is quite clear. Now let's look at the longer term chart. Let's check the weekly chart. From the weekly time frame, we can see that it's forming what's forming a bullish pattern on the smaller time frames. The smaller trend follows the larger trend. If the weekly chart is bullish, then the shorter term charts will continue in the same direction. What can we see? Here, the MACD has formed a bullish crossover. Bullish momentum is gradually building. You can see the momentum bars expanding. Each bar is getting larger. This shows that the uptrend still has room to continue. Take a look at the moving averages, especially these three, the 5 period, the 10 period, and the 20 period moving averages. They may converge next week. That convergence could form a support base, which would act as strong support for the stock price, because short, mid, and long-term averages would all be supporting the price at the same level. That creates a resonance effect. So the support on the stock price will be even stronger. On the weekly chart, momentum is still building, so this uptrend still has room to run. It will likely continue moving higher. That makes this a clear opportunity. And on shorter time frames, we can spot entry points, especially around this zone. A clear short-term bottom has already formed. So this whole area presents opportunities, and on the downside, this area can be treated as your stop loss zone. If price falls below it, you can exit the position. So in the short term, the upside probability is quite high. This is a good entry point. Alright, that was our brief analysis of Google. Just a quick take on its recent performance. If you have any other opinions or any questions, feel free to leave a comment below.